And if everyone stood for delivery overnight, the markets would blow up. There is far more paper on the Western exchanges than there are bars behind it. As we were mentioning earlier, the LBMA, which is a T+1 settlement, in 3 days you should have your metal or it should be on its way to you, is now T+8 weeks. 50 million ounces of gold delivered since November. This is why the U.S. has become a net importer of gold since November. This is why we're seeing the largest deliveries of gold and silver into the COMEX ever, because they understand.
In today's recap, gold surged to a new all-time high as the U.S. dollar weakened. Trump ramped up criticism of the Federal Reserve, and trade war tensions continued to rattle markets. Bullion climbed past $3,400 an ounce, driven by a drop in the dollar to its lowest level since late 2023. President Trump's consideration of removing Fed Chair Jerome Powell, alongside his calls for lower interest rates, has added to market anxiety. Chicago Fed President Austin Goolsbee pushed back, warning that undermining the Fed's independence could have serious consequences. Strategist Christopher Wong from Overseas Chinese Banking Corp echoed that sentiment, saying any move to politicize the Fed would damage the credibility of U.S. monetary policy, potentially eroding trust in the dollar and pushing more capital into safe havens like gold. The metal has repeatedly set new records this year amid market stress caused by the ongoing trade conflict, which has hurt risk appetite and spurred a flight to safety. Bullion-backed ETFs have seen inflows for 12 straight weeks, the longest streak since 2022. Central banks, too, have continued adding gold to their reserves, bolstering global demand. On the trade side, China issued a warning to other nations against making deals with the U.S. that could harm its interests. Upcoming data, including revised forecasts from the IMF, may further heighten concerns about a global economic slowdown. Bullish sentiment among major banks continues to grow, with Goldman Sachs now projecting gold could reach $4,000 by mid-next year.
They trade 2.9 billion ounces of silver per day, 3.5 times the annual global mine supply. And behind those 2.9 billion ounces are only 65 million ounces of physical silver. There's a problem there if everyone stands for delivery. And the same thing is true with gold. Somewhere in the neighborhood of 36 million ounces, I think, is the number of gold that is standing behind 280 or 90 million ounces in spot contracts. Really? So if every one of those contracts stand for delivery, what happens? And maybe that's why they pumped the brakes. And the bricks, as I've been saying on your show and others for 4 years, have been exploiting this by slowly. This is the little by little part. This is why I love the logarithmic decay, little by little, then all at once, because what we have been seeing for 4 years is the little by little by little by little draining of the exchanges, starting with the LBMA and moving all around the globe. You even see the draining of the Shanghai Metals Exchange, but that's for a different reason. That's because the Chinese are telling their people through the Shanghai Metals Exchange to save in gold and silver, and they are state-sponsored savings programs, so there are lots of deliveries. But on a bigger level, to see the LBMA be massively drained of its gold and silver and the COMEX, to see a change in the T+1 to T+8 weeks as a result of all of this demand standing against a fractional Fugazi system. And by the way, that's the same environment that the Hunt brothers realized in 1980. Way more contracts than there are bars. Let's buy up all the contracts and stand for delivery. Really, that became a problem, and the COMEX did what it could to save its own by changing the rules. But the LBMA is not an exchange like the COMEX is. There's no central clearing authority. There's no exchange to make rules. It is an over-the-counter, peer-to-peer trading network, much less regulated, much more opaque. And you're talking some of the biggest banks in the world are really in a very, very dangerous, I say, existential threat position by being wickedly short without the ability to get those bars for delivery if requested. And what's really different now more than ever before is the standing for delivery. And when I started talking about this in 2020, I would say, look, less than 1% of all these COMEX contracts ever stood for delivery. Same thing is true on LBMA, not a lot. And now all of a sudden, this is the Achilles heel. This is what the BRICS countries understood. This is what the Trump administration understands. This is why we've seen north of 50 million ounces of gold delivered since November. This is why the U.S. has become a net importer of gold since November. This is why we're seeing the largest deliveries of gold and silver into the COMEX ever, because they understand this. And they called it Trump tariffs. No, it's not Trump tariffs. It's that this administration, Scott Bessent, when he was, before he became Secretary of Treasury, he was running a hedge fund. His largest position was gold. Judy Shelton wants to issue 50-year treasuries pegged to gold. She told me Trump plans on doing this July 4th next year, the 250th anniversary of the country. She said he's going to do it. We've talked about it. Well, we'll see. But if you're going to peg gold to a new system, to a treasury market that has lost demand, that is weaponized, that is seeing since no new net buying by central banks since 2014, it's because of the lack of trust. It's because of the mismanagement of the system. So, yeah, I think it's a real deal. It's a very big deal. And because of the way the BIS, which is a Western institution, pulled out of Enbridge at the 12th hour, embarrassing, humiliating the BRICS countries, I don't think they're going to be open or forthright or candid or transparent about anything moving forward. I really don't. They're just going to get their ducks in a row. They're going to continue to do this stuff. They're going to be much more closer to the vest. And these are the kind of things that are happening in real time. I think it's a big deal, and people should not lose sight of the significance of this happening. And even a quasi gold-backed trade system would be enough to start to really derail the settlement status of the U.S. dollar, which ultimately impacts its reserve status. It's a big deal.
Switching to silver, the metal is once again in the spotlight as geopolitical uncertainty drives investors toward safety. Trump's latest retaliatory tariffs against major global partners have intensified market risk. China responded swiftly, warning its allies of potential retaliation, adding even more uncertainty to a fragile global landscape. Ongoing tensions between Russia and Ukraine, marked by mutual accusations of violating a holiday ceasefire, further amplify the risk environment. All of this has increased silver's role not just as a hedge, but as a strategic asset during times of global instability. Technically, silver is finding support near $32.78, having rebounded from $32.35, a key level aligned with the lower boundary of an upward price channel and the 50-period exponential moving average. This area is serving as a stronghold for bullish momentum.
But what's really interesting is while the price took a hit, we're seeing huge deliveries, which we've been talking about for a while, coming from the LBMA into COMEX. And this is not retail flow. It's serious money positioning behind the scenes. Look, silver's still in a structural deficit. And when you talk about solar, electric vehicles, green tech still roaring, let's not forget the military industrial complex and its need for silver. To me, it's a coiled spring. And if it breaks through 30 again and holds, which obviously, where are we today? We're well above 30. So let's see, what are we at here today? Let me look and see. So I know it's a down day today. We have silver at where the gold price, silver price. Yeah, 32.20. So breaks through 32 and holds, which it has. Look, upside is the upside potential on silver, Jesse, is it's off the charts as far as I'm concerned. And when you see the LBMA at this point having 260 million ounces of silver standing behind what amounts to 2.9 billion ounces in daily trading, 3.5 times annual global mine supply. When you see a situation where the LBMA has gone from T+1 to T+8 weeks, they're being drained. When you see the amount of deliveries coming into COMEX, off the chart deliveries, again, this is not retail. Yeah, I think silver to me is strategic. It's not industrial, and I think it's an existential threat to some of these big banks who have been doing all they could, let's just say behind the scenes, to position themselves maybe to slowly pull away from these massive leverage short positions. At least the smart ones are, and maybe that's what a lot of these deliveries onto COMEX represent, is the bringing a reshoring of gold to back these leveraged and naked short positions, which very quickly can turn this whole thing upside down. So look, you get through 35 is really what I mean. Then you're off to the races. It's you can look at 30, you can look at 32. These are certainly numbers that are big round numbers that silver's had a hard time getting through for a long time. But the real number would be to get through 35, and from there it's off to the races. To me, silver is, from a standpoint of risk versus return, I don't know that there's a better place on the planet, honestly. And when you see the amount of deliveries, that signals to me big institutional smart money knows that and is doing all they can with the price in order to reposition into much sounder footing moving ahead.
So, what's your take on Andy Schectman's forecast that gold could top $4,000? Are we finally entering the major bull market he's been calling for, or is this just another cycle top? And how are you navigating it? Are you buying physical gold and silver, or looking into mining stocks instead? Let me know what you think in the comments. I'm reading all of them. And remember, the markets are moving quickly, and these kinds of opportunities don't stick around for long. Now, jump over to the next video. It lines up perfectly with today's update. Catch you there.